Over 13,000 hotel rooms are currently underway in Dubai, while Abu Dhabi has over 5,000, according to a new report. Data from STR Global shows that Dubai has more hotel rooms in the pipeline than the combined total of the top 4 largest markets of the UAE capital, Saudi Arabia, Egypt and Jordan. The construction pipeline report shows that there are 2,687 hotel rooms underway in Riyadh, 1,977 in Cairo, 1,507 in Amman, and over 1,500 under construction in the MENA region. As a whole, for the region, nearly 500 hotels are under development, with a total of 13,438 rooms that were recorded last month. For the Dubai hotel sector, occupancy rates rose 4% last year. The UAE's Islamic home finance provider Tamwil PJSC has reported a net profit of 102 million dirhams for 2011, up from 26 million in 2010. In the fourth quarter of last year, the company posted a net profit of 31 million dirhams, compared to 8 for the same period the previous year. In a press release, the chairman of Tamwil, Abdullah Ali Al-Hamli, stated that the success of the company last year was down to resuming new business and the resumption of share trading, and that Tamwil will continue to play a key role in supporting the long-term recovery of the country's real estate sector. And with that, let's now take a look at the stock indices around the GCC. And we saw last week the US dollar drop pretty aggressively across the board, off the back of a rather dovish statement from the Federal Open Market Committee. Officials announced that their benchmark interest rate will stay low until late 2014, with inflation seen as subdued. So is the recent dollar weakness seen from the past 2 weeks the start of a bearish trend for the greenback? Well, we earlier spoke with Gaurav Kashyap, the head of the DGCX trading at Alpari Middle East DMCC.
Well, Laura, I think it might be a bit premature to write off the US dollar and say that it's entered into a bearish channel. Of course, we have seen the dollar index drop pretty aggressively since the start of 2012, but there are several different factors which are making me feel that right now the market is still in a bit of a positioning stage, waiting to see how developments out of Europe come out before perhaps confirming and setting a trend going forward. Of course, the Eurozone sovereign debt crisis, Greece's ongoing debt issues. To what extent will the private sector be involved in the debt swap deal with regards to Greece? Those will all be further clarified in trading this week. That will, of course, have an important bearing on risk sentiments going forward. Of course, one of the main factors that really the US dollar can really rally on is the fact that it's a risk currency. What that means is when times are tough and times are bad, investors will naturally flow into a lower yielding asset such as the US dollar. Remember, interest rates still remain between 0 and 0.25, which is the lowest of most of the international central banks. So it makes it a very favorable trade for investors who are looking for less risk. Of course, we're also going to continue watching the economic global growth recovery story. We do have an all-important US jobs data coming out this Friday. We'll wait to see how those numbers come. Anywhere between 150 to 200,000 will be good for the US recovery and could in fact further cement dollar weakness going in the week ahead.